Statistically, every single gold and silver substitute that has ever been known to man in all of financial history has all fallen to zero. So, do I think this will be the first exception in world history? No. I'm not naive, and I don't believe that.
Please join us for our next live stream Monday, August 28th at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be Monday, August 28th p.m. Eastern. See you then. Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. Rafi Farber, publisher of The Endgame Investor, an emotional balancing approach to the end of the fiat monetary system, is back, and we are happy to have Rafi join us once again today. It's time to saddle up and silver up for Rafi Farber. Rafi, welcome back to SBTV. How are you doing?
I'm doing well. Great to be here, Patrick. We're all under, a little bit of stress right now because of the silver markets, but yeah, doing well considering.
Yeah, that's true. Silver has been a little bit on the downtrend again, but for that reason, I'm going to have to start with the recent JP Morgan employee spoofing conviction. Is a conviction going to deter future spoofers? And they got off the hook. The racketeering charges, they just didn't materialize.
Well, my opinion on the whole spoofing phenomenon is that really none of it matters. It doesn't matter. Spoofing is a very short-term trick that's played by these banks, and I'm not even convinced that it's a bad thing or that it should be illegal. Maybe it should. I don't have a strong opinion on it, but I'm not going to look at this whole episode where some JP Morgan employee spoofs. I think it was like an algorithm, right? If you look at the details of these cases, these JP Morgan traders are trying to throw off the algorithms that are, disrupting their trades. So they're trying to fool computers so they can pinch off another few pennies on a trade somewhere. Does this really have to do with why silver and gold are down now? No, I really do not believe that. I think this is all misdirection and what a few traders at JP Morgan are doing with spoofing. If they want to throw off algorithms, what does that have to do with me? I mean, I don't care. The big theft, the big trick that is being played is the existence of the gold and silver futures market in dollar terms to begin with, because the fraud is really the fact that their trades, 4 or 5 times, I don't know the exact numbers, amount of notional gold on the COMEX and in LBMA or silver too, than actually exists. And the fact that that supply of notional silver and gold exists makes the market think that the supply is bigger than it is, and that's what suppresses prices. Um, what would fix that? Either the collapse of the dollar, which would mean the inverse collapse of the gold and silver future exchanges, or some kind of statute, which will not happen, that COMEX can only, or LBMA can only trade notionally the amount of gold that is in its vaults, and no more than that. That would solve the problem. This stuff is just a waste of time, and we don't even need to pay attention to it, I don't think.
Rafi, you've been reporting on the inflows and outflows of the COMEX. What are you seeing as far as the gold and silver drains?
I've reported on this the last 2 weeks. With gold, there's different things going on. For gold, there has been this past July was the biggest drawdown physically of gold supplies. I mean, the actual metal moving. There's two things that we need to talk about here with when we're talking about gold in the COMEX, right? There's deliveries, and there's loading out. Standing for delivery means getting a warrant. It's just a piece of paper or a digital certificate that whatever physical gold exists in whatever vault belongs to you. But then moving it out is a different process called loading out, and that's what I couldn't end up. I couldn't do it when I tried to on the COMEX because my broker wouldn't let me, and I'd have to try again with a different broker when I tried this personally. But in terms of loading out, meaning the physical removal of gold on the COMEX, that was at a record high, all-time record high last July, and it's still going. With silver, It's a little bit different. We have been trending down sharply in silver supplies since Silver Squeeze, which was on February 2021. I think we were at a high of 152 million ounces of silver, and now we're down to about 55 million. So almost 100 million ounces of silver, registered silver, has been drained from the COMEX. And that is different from gold because that silver isn't physically moving yet. It's still there. It's just being transferred from registered supply, which means registered supply is sold, uh, used to back contracts on the futures market, and it's moving into eligible, which means it's no longer being sold against contracts. It's just being stored by someone for who knows what reason, private wealth, or for a mint to for raw silver material, for not raw silver material, for bullion to make into coins. For whatever reason, nobody knows because the eligible supply, nobody knows who owns it. But in London, on the LBMA, silver is moving down fast. It's below 1 billion ounces now for the first time since, what was it, 2008, 2009, something like that, over 10 years ago. And that is being drawn down physically. So whether we need to see silver actually move out of the stores in COMEX, I'm not convinced we have to see that, but gold, I would like to see that, uh, because uh, because gold coins, when they are decentralized and they're taken out of big banks like J.P. Morgan, that would mean that when there's another pressure on the price moving higher, they can't just sell more that they in contracts that they have in the COMEX, because that would lower the price if it existed. But if there's not enough supply there, then a higher price would be sustained. And we're not at that level yet, but we're headed there. And I think there's like 14 million more ounces. So there's some work to do on this, but the direction is positive.
Okay, I just want to back up a bit. So, if I understood correctly, you tried to take delivery and your broker wouldn't help you?
Not only would they not help me, they refused. I got the warrant, but I used Interactive Brokers, and that was the wrong choice. There are other brokers that would theoretically do it, and I have heard of people who succeeded in taking physical delivery, meaning loading out. Taking delivery, I did, meaning I got the warrant, and I had a problem. I had trouble selling it too, but I eventually I was able to do that. There were all these kinds of margin issues, and it was very difficult and kind of nerve-wracking because at certain points I wasn't able to get rid of the warrant when I wanted to because I had to put more cash in the account for whatever statutory reason. It ended up okay, and I sold it. I sold it at a decent price for trading dollars with, but it was just a game. So loading out, though, they refused. They said it wasn't their policy, and there was really nothing I could do. I could have tried a legal route, but like I wasn't I wasn't gonna enlist a lawyer and spend more money on doing that. I would have to go through a different broker, um, which might be I forgot the name of it, but uh, RJO, right? What do they stand for? It was a broker called RJ O'Brien, right? They have a policy of allowing loadout, but I have never tested it, and you need to have a lot more capital to open up an account there than in Interactive.
Wow. Okay, so taking delivery is not the same as loading out. Okay. Rafi, you've said gold is money and the objective is to collect real money now. Why are you confident that gold will regain its preeminence as money once again?
Well, we can sharpen that question. It's not that I have confidence that gold will regain its preeminence. It has nothing to regain. Because if we're going to say it's going to regain it, then it doesn't have it now. No, gold is money right now. Meaning when you transfer any any dollar or yen or euro or whatever, what it is that you are doing is you are transferring a derivative of gold or silver. That's what you're doing now. Now the question is not when gold will regain its preeminence, but when fiat currency, as a substitute for gold and silver, will lose its preeminence as the way to transfer gold and silver when making a transaction. So, do I believe that gold and silver as gold substitutes will lose their preeminence for the main method of transferring real money, which is gold and silver? Yes, they will lose that status because statistically, every single gold and silver substitute that has ever been known to man in all of financial history has all fallen to zero. So, do I think this will be the first exception in world history? No, I'm not naive, and I don't believe that. Now, the question is always when and how. We don't know the answer to that question exactly when, but we do know that for the first time since late 1970s, early 1980s, the Federal Reserve, which is arguably the most powerful central bank as the issuer of the world's reserve currency, they are in negative equity for the first time since 1980, meaning the assets on their balance sheet are losing value, and as they own assets, and those are bonds, mostly treasuries and mortgage-backed securities, and the value of those securities fall when you hike interest rates. And so the dollar, which is chiefly backed by those assets, treasuries and mortgage-backed securities, and a slight little amount of gold in Fort Knox, which is also on their balance sheet, those assets are losing value. And meanwhile, the Fed has to pay more and more in interest on the excess reserves that it pays these banks. There's something like $5 trillion in reserves, plus all the reverse repos, that all this cash that the banks can't really do anything with, so they loan it back to the Fed, and the Fed pays interest on those reserves. So the Fed has to pay more and more and more of those dollars out to banks, and they're getting less and less and less on their assets on their balance sheets, so they're losing money. And the financial definition of hyperinflation, you can define it in consumer terms as when the desire to hold cash balances falls to zero. You can try to define it in terms of the rate of price increases in the consumer sector, or you can define it financially as when a central bank, the issuer of that currency, goes bankrupt. How can an issuer of money go bankrupt? When it's not an issuer of money, it's an issuer of money substitutes. When those money substitutes no longer substitute for real money, and the value of those substitutes go to zero. That's the financial definition of hyperinflation. The liabilities of the issuing central bank are worthless. And that's what happens to every central bank in history. No exceptions, none. The only exceptions are the ones that exist now, because the other ones before them went bankrupt. But these will go bankrupt too. The question is, where do you want to be when that happens? And I would want to be in real money.
If you're enjoying this interview with Rafi Farber and I, please consider subscribing to our YouTube channel to let the algos know you want to see more content like this. And if you'd like to learn more about systemic wealth protection, please do visit us at www.silverbullion.com.sg. In talking about the Fed balance sheet, I mean, they are trying to reduce it ever so slightly, ever so slowly. It's going down just a bit. And I wanted to ask you, maybe you touched on it a bit, but how is the Fed able to bring the balance sheet down? I mean, what are they doing there? They're trying to burn off cash. They're trying to hold cash and give the banks interest on it so it never gets out in the economy.
Yeah, well, that's what they have to do now. They printed so many dollars since COVID, and really since 2008, that there's all this extra cash that the Fed has to pay the banks on those reserves, or the banks will have to try to loan them out into the economy. And that would be catastrophic for the dollar, because then all of a sudden you'd have these trillions of dollars in the economy that weren't there the day before. And what happens to the value of the dollar then? I mean, it would be unprecedented. Everything that's been happened since 2008 is unprecedented, but it would just be another unprecedented thing within the unprecedented chain of events that's happened the last 12, 13 years. And so they're paying the banks to keep them in, and they're going to have to pay more and more and more. So it puts them in an impossible situation. Either they suffer the losses on their balance sheet, which means that the dollars that they have to issue these banks to keep their reserves inside the Federal Reserve System, those dollars are literally unbacked, because the dollars that have come into existence until now, how they come into existence is they buy treasuries. Like, the Fed takes in the asset of treasury on its balance sheet, and then in return gives the liability of the dollar to whoever they're buying the treasury from, which is usually JP Morgan or some commercial bank. Right? So JP Morgan gets these reserves, and the Fed gets an asset. But if the Fed has to pay interest on the reserves, that JP Morgan already has, how do they bring those dollars into existence to pay JP Morgan? They bring them into existence without getting any asset in return. So there you have a truly unbacked dollar. Now it all gets mashed up and they're all fungible. So what you have is a higher and higher base of dollars backed by fewer and fewer and fewer assets, which functionally makes the dollar worth less. And that's where we are now. And now it's just we're already going downhill. There's no way the Fed can stop its losses without printing more money and buying more bonds. That's what it's going to have to do. It's going to have to reverse interest rates. And we all know what's going to happen to gold and silver when they reverse interest rates, when price inflation, as they measure it, is around 10%. Everyone's going to say, "Oh, forget it. The dollar's gone. We're going to go to real money." That's what's going to happen. So it's one thing or the other. I mean, we see the Fed being sandwiched in on both sides, both directions. Either they lose money on their balance sheet or they destroy the dollar, and they're running out of maneuvering room. It's just a matter of time, just waiting for that singularity to hit where they really cannot move anymore and everything explodes. And I think it's going to happen suddenly. When it starts to move, everyone is going to know at the same time what is happening, and we're not far away from that. I don't think we're years away. I think we're months away, despite what's going on in the gold and silver markets.
I'm all for sound money. I surely would like to see gold, silver, return to back whatever currency is going to be out there. But there's a little bit of an issue with that, where when we have a gold and silver standard, politicians, they just don't seem to like it. It forces them to be responsible. So the question really is, if we would like a gold and silver standard or some sort of a standard to reappear again, how do we then deal with these politicians who simply don't want it?
I don't think that's going to be a serious issue. I hope it's not going to be, because this look at where we are in the world. We're the first situation ever where we're experiencing a global bankruptcy. All governments are bankrupt. Not it hasn't revealed itself yet, but usually what solves these problems is bankruptcies. When you no longer have the resources with which to enslave people, you stop enslaving people. It doesn't matter if you want to enslave them. If you can't do it, you can't do it. So what is the core of these politicians that we're complaining about and that we think that we have to stop? The core of their power is the seigniorage, the money substitute that they issue with which to bid away goods and services against us and impoverish us and enrich themselves. And but that's how they maintain their empire. How so? Because if they want to enforce any kind of regulation, it doesn't matter what it is. It could be locking us in our houses. It could be, paying us off to stop complaining about being locked in our houses, giving us a few checks. Say, oh, just stay in your house and we'll give you $100 a month or some stupid thing like that. And then people are like, okay, I guess I could buy, some bag of chips with that, and that's nice, and I can eat chips while I'm at home. But if they run out of money to pay their thugs, then it doesn't matter what they want. It doesn't matter what their desires are. What matters is what they have. And once their substitutes do not buy anything, they have nothing. So we don't have to worry about what they want. It's all an illusion.
Yeah, Rafi, you think we're going to see that the the sort of pain that's going on in countries like Sri Lanka, countries like Argentina, the pain in having to pay higher energy prices that Europe, particularly Germany, is seeing right now? Do you think this pain is going to come on over more into Europe, more into the West, like the U.S.? And at what point does is this the straw that's going to break the camel's back?
I don't know what the straw is. The camel's back is loaded up with a bunch of garbage. And what's gonna break it? I wish I knew what that straw was, because then I'd look for that straw and I'd say, when that straw hits, I'm gonna do what I need to do. I don't know what the straw is gonna be, but are we gonna have more Sri Lankas? Yeah, we are definitely going to have that. We've had that in Europe many times in the past. After World War One, there was tremendous pain. After World War Two, during and after World War Two, there's tremendous pain, impoverishment, hyperinflation all over that continent. And you don't want to. Could I call the COVID era? Could I call that World War Three? Call it what you want. I mean, give it whatever nomenclature. But it was a destruction of resources and human capital to a degree that we've never seen before. It was global. And that was a destruction of resources. And when that happens, people get poorer. So we're still dealing with the consequences of that, and that is going to continue. And the reverberations haven't completed yet. How bad is it going to get? It's going to get bad for people who do not own real assets, and it's going to get slightly less bad for people who do own real assets. It's not going to be easy for anyone, even if you've got all the gold and silver that you need. It's going to be hard for everyone. But what we want is to make it easy for those who see what's coming. And then you see a huge power shift from the people that have all these fantasy assets and want to enslave us to the people who have the real assets and want to free themselves. And I hope we can get there fast, because this slavery is not what I want to live through.
During the bug, the pandemic, we saw the Fed's monetary base just grow astronomically, hockey stick patterns on their charts, but yet we don't see people flocking to the safety of gold and silver during now this time of inflation, knowing that there's an excess of money that has been printed. I mean, what do you make of this environment right now where we aren't seeing people flocking to gold and silver, and we aren't exactly seeing the prices reflecting the safe haven assets that they're supposed to be?
No, we're not. But let's go back in time to 1974, right? 1974. Nixon had just closed the gold window, and the fixed rate. I don't like to say went off the gold standard, because we never went off the gold standard. There is still a gold standard, and that dollars are still exchangeable for gold at 1770, 1780, whatever it is today. You could still get gold for a dollar, so there is still a gold standard. But what happened in 1973 was you had the oil embargo, and I think in that year, food prices went up just in that year 20%. And there were real worries of hyperinflation in that year. And what did gold do from 1974 to 1976? It fell. It fell like 50%, some crazy number like that. And everyone was asking the same questions, not on Zoom or Skype or Riverside or whatever technology we're using, but gold bugs are saying, what is happening here? Why is gold falling? You have an oil embargo, you have these crazy price increases, and gold is going down. That's insane. The answer is yeah, it's insane. But does it last? No, it never does. Because what happened from 1976 to 1980? Gold quintupled. All right. So, years from now, people are going to be looking back and saying, what happened with what happened with gold and silver from from 2020 to 2022, or 1974 to 1976, whatever the years are. Okay, so gold went down. It does that, but then reality is still reality, and the reality still is that all of the money that we use, all the money substitutes that we use, are still based on that same pyramid where the base of it is gold and silver. That does not change. That cannot change. So how long is this going to last? Are we in 1976 now? I hope so. I believe that we're close, because the Fed again is being cornered, and once it can't move, the metals have to move.
Okay. Yeah. So if we are close to 76, shortly after 76, 79, 80-ish, we saw Paul Volcker come in. He had an inflation rate of about some 9-10%. And he raised the effective fund rate. He raised it up to about close to 20%. Do you think the Fed is going to do that this time? We're at about the same inflation rate, but does the Fed have the will, or politicians have the will to raise interest rates? Can the economy take it up to 15-20%?
Um, well, this question I can answer definitively. No, they're not going to do that. No, no way. Could they theoretically do it? Yeah, but then you have to think about what happens in the event that they do that, right? That means that all of these bank balance sheets, and not just the Fed, all of these bank balance sheets that are stuffed with debt to the gills and all over the world, all that debt goes to nothing as it can't be repaid. And so everyone's balance sheet, all banks' balance sheet reset, and they all go bankrupt. And then we go back to like a 1980s price array in dollars. And is that possible? Yeah, but would it destroy humanity? No, it wouldn't destroy humanity, but it would be a global reset, a financial reset where basically everyone in power today, everyone in financial power who make their fortunes by the inflation of the money substitute supply, they would be out of power because they'd all be bankrupt, and then they would have to peacefully transition from their positions of power to being peasants. They're not willing to do that. They're not going to do that. What they're going to do is they're going to keep inflating, and they're going to try to build their own safety nets, their own parachutes, their own separate wealth accounts of gold and silver somewhere in some bunker, and they're going to fly away to their bunkers when they need to, so they don't get lynched by the mob. And then they'll just let us. They'll leave the mob with the damages, with the collateral damages, and then we'll have to sort out the mess later. That's what they're going to do. They're going to save themselves and screw the rest of humanity.
We've long said that if you don't trust the country, how can you trust the money the country creates and trades with? Had we remained on some sort of a gold standard, would these things like sanctions, wars, inflation, the loss of liberties, and on, would they be happening today where these things will continue to get worse and worse until chaos?
Yeah, they will. They will continue to get worse and worse until chaos. And then look, the question is, how bad are they going to get, and are we going to have the right type of people to lead us out of this mess? I mean, I can get like very simple examples, right? In like 1916, 1917 Russia, when the Bolsheviks took over, so I mean, they had legitimate gripes, these communists, and the czar is abusing us, and we don't have enough money to live. So whatever it is, same thing that Sri Lanka is experiencing now. The government's stealing from them, and they don't have enough, so they're protesting. Okay. But did the Bolsheviks understand what the source of wealth is? That it actually is human liberty and dignity, and allow people to exchange on their own terms, and then they will become richer. They didn't understand that at all. So what they did was they ended up killing everybody. That's a revolution that ended up killing a lot more people. It didn't save anybody. It saved, maybe Stalin himself. But it killed millions of people. Whereas you have the revolution in the United States, which had very wise people behind it. Not all of them wise people, but it had enough wise people behind it that understood the values of liberty. I don't know how this happened historically. Personally, I believe God's hand was behind it. Because what else am I going to say? People who decides what kind of people are put on the planet anytime. None of us do. They just souls are put here, and we don't know why. So are we going to have when this horrible whatever is coming happens? What kind of leaders are we going to have in place? And none of the leaders today know anything. So it's going to have to be a new guard of people, and really, it's going to have to be us, because there's no one else that understands what's going on. It's going to have to be the people in the gold and silver community who understand the base of liberty is monetary freedom, because money is the source of the transaction of all wealth. How do you divide labor? You use money. So if you don't understand that you need freedom, free market money, which is gold and silver, nothing else is going to work. So the leaders of the world are going to have to be us, which is why we're coming together, which is why we're having these discussions. And somebody's got to take responsibility. And I'm trying to do that in my own community. You're trying to do that in Singapore. I'm trying to do it in Israel. People are trying to do it in America. And we're all trying to figure this out because there's no one else to do it.
Yeah, yeah, completely agree with everything that you just said there. Rafi Farber, before we head on out, can you tell us about the Endgame Investor and how people can follow you or contact you?
Yes, you can find the Endgame Investor. Just type it into any search engine, Endgame Investor. It is a daily newsletter focusing on the gold and silver markets with an emphasis on COMEX, and how I train people to trade and to invest is specifically for times like these when we're all in the dumps and our emotions are saying, oh, maybe gold isn't money, maybe silver isn't money anymore, maybe the central banks will be in power forever and we'll just be slaves. And when these emotions start cropping up in us, how do we defend against them? And my answer is you trade with emotional balance. You always keep a balance of cash where when you feel these emotions, they are cues, they're hints that we are near a bottom, because the worse you feel, the closer you are to a bottom. That's how it always is. But you need to be wise, and you need to be able to tell yourself that, no matter how happy I am at tops or how frustrated I am at bottoms, you have to keep the reality in mind, and the reality does not change. So you can sign up at the Endgame Investor, and you'll see a landing page if you type it in. It's through Seeking Alpha, or you can become my patron on Patreon. It's patreon.com/endgame investor. You can also search that, and you'll find it pretty easily on any of my videos, which my YouTube channel is Rafi Farber, Rafi Farber. You can type that on YouTube and find it, and you'll find all the links there. Yeah, that's how you find me.
All right, Rafi, those are some wise words. We appreciate that. Rafi Farber had a great time chatting with you. You gave him some great insight here, and I hope we can really do this again soon.
Yeah, it was great talking to you, Patrick. I always appreciate a good conversation with you.
That was Rafi Farber sharing his views on the economy and the world today. Follow more of Rafi's work by following him on Twitter at Rafi Farber. If you like this video, please give it a thumbs up, share it with your friends, and subscribe. These really do help us out a lot. Audio-only versions of this interview can be found on iTunes and Spotify.